Morning everyone, hope you're doing well. I just wanted to make a quick post. In my last video, I know it's been a very long time, my last video was referencing these bridge bands that I can never remember the person's name and I'm really sorry, prepared for TradingView. So there's two things that's sprung up right now and I just wanted to quickly make a video about it just to make reference. Okay, so the two things we're going to look at is one is the DAX and one is the euro. Okay, so I don't know how it works, but this is kind of, this center line here is kind of a trend line, and then this is what you could kind of reference to the risk ranges, if you like, these two outer bands. Okay, so red means it's in a downtrend. Basically, when it goes below this trend line, it then turns to bearish. Okay, and it's then colored in red. So this is signifying this now in a downtrend. Okay, so just for wiggly lines, I tend to keep these updated just so that when I go down the time frames, I can just use it as a point of reference. Okay, that's just me being me. It does, it's no, you know, use it as you want. Okay, so the risk ranges have been updated this morning, and we're at the bottom end of the range on the Euro US dollar and right at the top of the range on DXY. Okay, so my last video was referencing how to build up a position. Okay, you don't want to buy the falling knife, you don't want to buy things as they're heading down towards the bottom of the range. I know it's hard and the ranges move, you know, Keith says that all the time, and not everyone has the time in front of the screens that I do to be able to pay enough attention to it, but I just want to show you what I do. It might allow you to, you know, figure out a way to do it if you're working with less time. Okay, now if you go right down the time frame, so this is the 4 hour, so it's a different chart. This is the 2 hour. Okay, so these lines start to become important. Okay, this is the 1 hour, so we're right up against this. Let's just move this out of the way. Okay, so we'll keep the risk range. This is the top end of the range, low end of the range as published on Hedgeye. Okay, so you can see that on this lower time frame, we're at 1 hour. It got to this trend line and reversed. Okay, so that's just something to pay attention to, and we're at close to the bottom of the range. Okay, so instead of buying it as it's falling, what we're trying to do is establish where it's going back into this uptrend, and then you can add on the way up. Okay, so yes, you can have an automatic buy set at the low end of the range for whatever position size you want. Okay, but what gets people in trouble is you want to be building a position kind of in this period rather than catching all these falling lives all the way down. Okay, now again, I have more time in front of the screen to be able to try and do this, and you know, I can build my positions throughout the day. Okay, but this is just how I do it. If we go even further down, you can see it's playing at this again, and the same, and it's above it at 15, down at the 15-minute range. Okay, so on this break here, down at this, I entered a long position here. Okay, so I have a really small, I play with leverage, I play in FX, I have time in front of the screen. Okay, so it's a very small position for me. Okay, because I have leverage on the position. So I entered along here. Now I'm just waiting for this to play out because we have this level 118.6, then a bit higher up. Okay, so it's playing around this level again, 118.7. Okay, if we break up, so this is 118.8. If we, these levels are roughly in the same place. If we break that level, this one, I will enter long again. So I actually have an order already in place at 118.84 I do on my broker account. So it will automatically trigger at that level. So I'll have added to the position on the way up. Okay, so at 118.4 for me, I will add a second position in long euro. Okay, so if we go up, at the very least, it will go, or should go, to around about 119. So I can make the choice then from 118.8. So yeah, 118.8.4. I can make a decision. I have two positions, so I can either cut one, take some profit, okay, and ride something coming back down to the next level again. So maybe it will test this back level again. Okay, so maybe it will go from here to 119 and back again. All right, I don't know, but it's allowed me to catch an uptrend. Okay, does that make sense? I know it keeps swapping backwards and forwards, but you know, you can search for this bridge bands. I've kept all the standard settings just so that it's no different to what you would have in front of you, and I actually don't change any of these. So just, you can have a look. It allows me then to, you know, as I say, these separate levels, I can build positions as I'm going up. And I think this is the main point for people, is they keep buying all the way down to the point that if the price keeps going further, they don't have any cash to deploy, okay? And that's when people get in trouble, because then they start going into red, or further into red, that when price does go back up, they tend to start closing positions out, because there's a natural behavioral feeling like people don't want to be wrong. People don't like, people feel a loss more than they feel a gain. If someone takes £10 or $10 away from you, you feel that much more than someone giving you £10. Okay, it's a natural, it's a behavioral, it's a human trait. So we tend to shy away from pain, if you like. So we want to try, and that's why people double down on losers, because they want to reverse a mistake. They want to reverse the pain. Okay, what that does is, if this transitions up into this top half of the risk range, it means then that you've probably taken profits, because you've been buying all the way down. You've probably taken profits on the way up to save yourself the pain of that bad position. So then, if you take oil as an example, okay, that going through, let's go all the way back, going through this period in March and April, when people were in a lot of pain, you could see it in the macro show, you could see it on the arena, people were in pain in this period, so much so that, not everybody, but there's a good chance that when it started making these highs, they didn't want to go through this pain again, because they rode it all the way down and kept buying, that they got into a bit of green and they're like, right, get me out of here, I don't want it. And they weren't able to ride this all the way up by just leaving the position alone. Okay, that's not everybody, but I'm judging that there's probably, and the worst thing is the next dip that happens in oil. This is something I spoke about this morning with someone. The very first time it dips from such a high position, is people will probably pile in again, just at the point that it's been going up for the last 3 weeks, and it will sell off again. So there's a behavioral part in that as well. Okay, so this has been about trying to build a position on the way up. Now it's about watching the DAX. Okay, so I'm not using the ETF that's in ETF Pro at the moment, so I'm not using EWG, I'm looking at the futures price. Okay, now we've got this level here, what are we on, 1 hour now, okay, roughly at the center line of the risk range, so 15,600, okay, and it's roughly the same at the lower, at the half hour, and it started coming down. It was at that same level, was at that same because it's gyrated around this price and it's started to fall. Okay, so there's a chance that this is going to fall and we could break up through it. There's every chance of that. But if we go just a little bit higher in the time frames, we can see that 15,600, the price is gyrated around it, had a big gap up yesterday, came back down, and it actually, this wick here, this candle, almost tested it right on 15,600 and it's come back again. Let's just move this out of the way again, okay? And it's come down and tested this one. I don't really do the old, like, what's it called it? Supply and resistance. Anyway, the resistance lines, that sort of thing. Support and resistance, that's the right one, sorry. Okay. But it keeps testing these levels and it's making these lower highs. So a little bit like what I've just mentioned about oil, there's a chance that people have missed out on this massive run on the DAX. Okay, you kind of had this chance in May, then it's ridden back up again. There's a chance here that it's made, although, you know, on a very short time frame, it has made a lower high, and then it's kind of testing these in between these two levels. There is a chance that people could get caught buying into something that they missed out on. Okay, so it'll be interesting to watch when and if the price gets back up to that level, especially bearing in mind, you know, what if the euro, if this euro trade does play out, the euro goes higher, will the strong euro have even just a short term 1 or 2 day impact on the indexes? Because things tend to go in cycles. I've noticed it, and commodities tend to have a good month, and then equities have a good month, and then it kind of goes in a cycle. I don't know if it's, obviously Keith talks a lot about the machine. I don't know whether this cycle is just I'm doing bunny ears in front of my computer. Bunny ears, the machine, or whether it's short-term trend followers. I don't know, but I've noticed that things tend to kind of go in these monthly cycles where certain asset classes do really well, and then the baton's handed off. You know, just at the minute, the baton is well and truly with the equity markets. A couple of weeks ago, obviously with a massive strengthening in the dollar, FX came off. Everyone's all concentrated on the equity markets. I don't know, that's just anecdotally and something that I've noticed. So yeah, it was really quick, nothing scripted, and I just wanted to try and describe the things that I'm looking at, and these are a couple of the things that I'm looking at this morning. So I've entered a long euro position here. I'm looking to enter another one, and I have an order set in, and I just, you know, the maker of these bridge bands actually says not to use it lower than the daily range. I tend not to use necessarily these levels. I use this trend line much more than I use Keith's risk ranges, and then I set my trades by this trend line. So I'm finding it very useful. So I just thought I'd share it. Okay. I keep saying it. I keep saying I'm going to start making more videos, but I've been caught up in that many things that it keeps getting pushed back and back and back. But when these things crop up, I'll try and make a video, try and force myself to make a video as it's happening, as I'm doing it, just so that it's fresh, and at least if you want to go and have a look at it yourself and try out these little things, you can at least have a look. Okay, right guys, thanks a lot, cheers.